Hi guys, welcome to the chapter. Here we are going to see the case study for professional ethics chapters in financial reporting. So here I'm going to explain all the illustrations with the easy approach to your exam. So I'm not going to study the entire case study here. You have to study the case study. I'm just explaining the how to write the answer and what is most expected in the answer. Okay. So first case study, it is a sale with buyback. So they have treated a repurchase agreement as a sales. So this is the case study. Now we are going to identify the issue. What is the issue? The issue is whether the transaction involving a sale of land with the option to repurchase, that is, you have to repurchase, it has been incorrectly treated as what? It has been incorrectly treated as a sale instead of financing arrangement. So you should treat that as a financing arrangement, but you have treated it as what? You have treated it as a sale. So why you are treating it as a sales? Thereby you are going to inflate your profits and you are going to eliminate the bank overdraft, okay, to show that you are in a good financial position. So first you have to write some insights about the integrity, objectivity, professional behavior and professional competence and due care. These are the ethical principles. You just prepare your own framework for all the answers. Okay, you cannot sit and study for each case study. So you try to understand, like, integrity in the sense being honest, objective in the sense you should not be biased. Okay, so you just follow the template. Okay, same like this. So relevant ethical principles you have to explain in one sentence or two sentence. Try to explain integrity, objectivity, what is being affected in the case study. Okay, now, so with respect to relevant Ind AS, revenue from contract with the customer, that is, it is a repurchase agreement because the control has not been transferred. It should not be treated as a sales, right? What is the ethical implication in this question? Accounting the transaction as a sale instead of a repurchase option is a window dressing. Okay, so you are doing something different, that is, it should be treated as a sale. No, it should not be treated as a sale. It should be treated as a repurchase option. You treat it as a sale, so you are window dressing. Second, you misrepresents the substance of the transaction and you compromise the integrity and objectivity. Such treatment misleads the stakeholders and violates the public interest responsibility of a chartered accountant. These are the points you can add on. Now, what actually the course of action that a chartered accountant should do? So he should treat the transaction as a financing arrangement. Okay, so he sold the land, right? Now you have to reinstate the land there and you have to recognize the financial liability and you have to reverse the incorrect profit and you have to ensure that you are in compliance with Ind AS 115. This matter should also be communicated to TCWG. Okay, next is misconduct clause. If knowingly you are permitting the uh, company to do that, okay, then you will be guilty of the clause number 1 part 2 of the second schedule. So here I'm saying for all the cases you remember two things. If you are employee or if you are practicing chartered accountant, if you are employee of the company and if you are doing any misconduct, then you will write, okay, clause 1 part 2 and second schedule. Okay, second schedule you will write. But if it is a practicing chartered accountant, then you can write clause number 5, 6, 7, 8 of the second schedule. Okay, you have to write it. So this is a part 1 second schedule, right? So one more point to add on is the failure to exercise the due diligence as per the council guidelines. So this is also these are the misconduct laws you can quote on your exams. Okay. Okay, so the next case study is the non-recognition of dismantling provision. They are saying that if whenever the expenses occur, then we will charge it to the P&L account instead of charging the provisions. Okay, so this is what the director is saying. That is the director decision to not to recognize a dismantling provision but to expense the cost when it is occurs. Okay, now, so this is a problem. So we are going to say integrity, objectivity, professional behavior, and professional competence. Okay, now what are the relevant Ind AS going to this one you should not write straightly like integrity, objectivity. Every line you have to write one point. Thus he is not being not proper, he is not honest, he is being biased. Okay, objectivity, he is not doing his duty properly. Okay, so you have to write that way. These 4 points you can write on your own. Now relevant Ind AS. So the relevant Ind AS 16 property, plant and equipment, and Ind AS 37 you have to quote for this question, right? What is the ethical implication? The ethical implication is that the deliberate non-recognition of the provision results in material misstatements. So because it violates the professional competence and professional behavior, you know that you have to recognize the provision. If you are not recognizing the provision, then it results in material misstatement, right? Now, what is the correct course of action? So as a chartered accountant, we have to ensure that the capitalization of dismantling cost with the corresponding provision and you have to communicate the corrective action to the directors and ensure true fair presentation. See, what we have to do, we have to create provision. Okay, so if we create a provision, that provision should also be added to the cost of asset, right? So if you know chapter 16, Ind AS 16, then you can easily understand this concept. Okay, so you have to capitalize the dismantling cost along with the corresponding provision, and you have to say the corrective action to the directors, and also you have to ensure the true presentation. If it is unresolved, then you have to refuse to be associated with your financial statements. Done. So if allowed, okay, if you are allowing them to present this way, okay, whatever they have decided, then you are guilty of professional misconduct from clause number 5, 6, 7, okay, of the part 1 of the second schedule. Third one, okay, this case study is a misleading cash flow projection. See, for every case study, I'm going to give you the insights, how to write the answer, okay, how to identify the issue, how to quote the relevant ethical principle, and what is your ethical implication and the course of action and the misconduct clause. So this is I'm explaining for every question. So if you know the extra points, if you remember the extra points, please add on the extra points. But whatever I'm discussing, these are the minimum points you have to quote in your exams, okay, so that you can easily score at least 3 to 4 marks out of 5 marks. Now, misleading cash flow projections to the bank. The issue is whether the chartered accountant can submit a misleading projected cash flows to the bank under the pressure. See, you are going to give the banker the projected cash flows which is misleading, which is not true, okay, and because you have personal financial constraint, you are going to do this. So what are the ethical principles here getting affected is your integrity, because you are not honest, okay, and objectivity, you are being biased, okay, and here the professional competence, you are not following your laws and regulations properly, you are not um, giving due respect to your profession. Okay, so these are the things you can add on here. What is the ethical implication? Now, providing the misleading projection, it is going to compromises two things, that is your integrity and objectivity, and also the personal pressure. Okay, it is going to create a threat. What is a threat? Self-interest threats, and it's going to violate the public interest responsibility, right? So what is the correct action you have to do as a CA? You should refuse to submit this kind of projection, and you have to insist on the honest representation of the financial position irrespective of the personal consequences. Whatever the personal consequences, let it be, but you have to say we have to present the honest representation, right? Misconduct laws here, if you give the incorrect projection, okay, then you will be guilty in the clause number 1 of part 2 second schedule. This is the contravention of the council guidelines, right? Okay, next case study is structuring the lease to avoid the Ind AS 116 applicability, right? Now the issue is whether deliberately structuring the long-term lease as a multiple short-term lease. See, there is a short-term exemption in lease, okay, lease. So if you have studied the lease chapter, then you know there is a short-term exemption for lease. So what you are going to do is that breaking the long-term lease term into a short term such that Ind AS 116 is not going to be applicable for them. Okay, again the relevant ethical principle, you quote these three. Now what is the relevant Ind AS? The relevant Ind AS is Ind AS 116, that is the lease which is substance over the form. Now what is the ethical implication? This is a deliberate attempt that you are going to circumvent the accounting standards. Okay, first of all you are going to circumvent the accounting standards. Now you are going to leading to the off-balance sheet financing, and you are also misleading your stakeholders. These are the three ethical implications. And as a CA, what you have to do is the chartered accountant should ensure the accounting based on the substance and insist on compliance with Ind AS 116 and refuse the association with misleading structuring. Okay, so what are the three things you have to do? You have to comply with the accounting standards based on substance and compliance with Ind AS 116, and also you have to refuse with the misleading structuring, right? The last one is a misconduct clause. Again, the same thing you have to write like clause 1 part 2 of the second schedule. It is a violation of Ind AS, so you will be guilty of the misconduct. Okay, so you have to be thorough with the clause. I'm not I'm not helping you to read the clauses here. Okay, so I'm assuming that you have already studied in your audit. Okay. Okay, fifth illustration, that is pension cost shifted to OCI. Normally pension cost we will charge to P&L account, but they are saying that we are going to shift it to a OCI account. This is the issue. Now here integrity, objectivity, professional behavior, right? These are the ethical principles required. And what is the relevant Ind AS? So the relevant Ind AS is employee benefits and accounting policies, because they are going to change the accounting policy of shifting from P&L to shifting to the OCI account. Okay, that is the change in accounting policy, and this is insisted in Ind AS 19, that they have said that mostly pension cost should go to the P&L account, right? What is the ethical implication? The proposal is driven by self-interest of the director's bonus, since they have to get the bonus, and it results in the manipulation of presentation and misleading the stakeholders. So what is the course of action that the CA should take? The chartered accountant should reject the unjustified policy change. Okay, it is not a justifiable policy change, and he has to ensure the compliance with Ind AS 19, right? And communicate this non-compliance to the governance. So here the course of action, mostly it would be like one point you can write in all the question is that compliance with the standards. Okay, compliance with Ind AS 19 or Ind AS accordingly, Ind AS 115. So that one you can write, and the communicate you have to communicate to the those charged with governance or communicate with the directors. Accordingly, on the basis of question, you can take the course of action, right? Now here since in this question it may be a practicing chartered accountant, that's why they are saying clause number 5, 7, 8, that is failure to disclose the material facts and lack of due diligence and insufficient information, right? So these three clauses you have to quote in this question. So this is again a part 1 of the second schedule. Number 6, misclassification in the cash flow statements. So here the proceeds from the sale of equipment, okay, and investments can be classified as, okay, cash from operating activities. Okay, cash flow from, that is cash flow from the operating activity, which is the sale of equipment, okay, and investment. Whether the sale of equipment and investment is a operating activity, no, it is an investment activity rather. Okay, so whether this is correct or not, okay, see here, so this is the problem actually, this is the problem. What is the correct action, the chartered accountant should ensure that the classification under the investing activity, and he has to prevent the misleading presentation, right? So here there is no objectivity and integrity is not coming in this question. Okay, here it is only professional competence and due care and professional behavior. Relevant Ind AS, you can easily identify it as a cash flow, right? What is the ethical implication? Misclassification, right, misleads the users about the operational sustainability and constitutes a creative accounting. As we studied in one question, we studied about window dressing. It is a kind of question. Here you are doing a creative accounting. Okay, this is a keyword you have to remember. Next, so here again, clause 1 part 2 of the second schedule, this will be a misconduct clause, right? So cash flow statement, the gist of the question is very simple. They have classified it as a investment, they have classified it as an operating activity, rather it should go for investment activity. So as a CA, you make sure that you are doing at the investment activity and you are preventing the misrepresentation or misleading presentation. Okay, withholding employee bonus to boost profits, right? So here what is the issue is that you are avoiding the discretionary employee bonus. It is only to improve your profits. Why you are going to improve the profits? Because if you avoid the bonus, it is an expense, right? So you can increase your profits. So on the basis of profits, the director are going to get the bonus. So director is going to get the bonus, but the employee bonus you are going to avoid it. Okay, so here again, integrity, professional behavior and public interest responsibility is being violated. Okay, you are not being responsible to the public. Now, ethical implication. Though legally permissible, it is permissible, you can avoid paying the employees a bonus. Okay, that is up to you. But the problem is the ethically questionable and damages the employee morale. Okay, ESG indicators and long-term sustainability. See, you are not paying the amount to the employees. Okay, you are not paying amount to employees, but you are paying the amount to the directors. How can the employee will accept? Okay, it will lose reputation and they will have a very bad impression on the company. The employee will have the bad impression. Okay, so these are the things you can understand. Now, what is the correct course of action as a CA should do? The CA should advise the management considering both the financial and non-financial stakeholders impact. Okay, so you just consider the impact on both financial and non-financial stakeholders. Okay, now what is a misconduct? Here generally no misconduct here, because there is no misleading disclosures are not made. Okay, here nothing like disclosures. They are just planning to avoid the bonus of the employees and to provide it to the directors, which is morally it is not correct, ethically not correct. Okay, one kind of different question this is. Okay, you have to remember. Illustration number 8. What is the issue? Classification of loan to director as a cash and cash equivalents. Now you have given a loan to a director, so the loan is being treated as a cash and cash equivalent. Whether it is correct? No, because cash and what is cash and cash equivalents? You have to write. Okay, I will just explain whether such presentation is ethically correct or not. Okay, that is the question. We have identified the issue. Now these 5 points you can write. Okay, integrity, objectivity, professional competence, and you are not acting in the interest of the public, right? Okay, what are the relevant Ind AS going to attract? So cash flow, you can easily identify this is a cash flow. Why financial instruments? Because it is a loan. Okay, loan, you have the right to receive the money, so it will be treated as a financial asset. Okay, so again you are given to a directors related party disclosures. Again, some conceptual framework for financial reporting, qualitative characteristics you have to write. Okay, 3 characteristics will be there. Refer study material for that. Okay, so you have to write that. For this question specifically, remember that. So these are the relevant Ind AS. Now what is the ethical implication we are going to see? As per Ind AS 7, cash and cash equivalent is a short-term, high liquid investments that are readily convertible into the amount of cash, right? Now, what is a loan? Loan to a director does not satisfy these conditions. Okay, so here presenting such loan as a cash and cash equivalent is a misrepresents the financial position, okay, and violates the faithful representation and compromises the qualitative characteristics. So it may also indicate the management basis and conflict of interest, thereby misleading the users of the financial statements, right? So you have to write this is not a cash and cash equivalent, this is a loan given. So if you are treating it as a cash and cash equivalent, then you are misrepresenting the financial position, you are compromising the characteristics. Okay, yeah. So what is the correct action that the chartered accountant should do? So here the chartered accountant should advise the management to reclassify the loan as a financial asset, okay, under Ind AS 109, and make appropriate related party disclosure, ensure the transparent and faithful presentation of the financial information, and you have to rectify the financial statements to comply with the Ind AS as per Ind AS and conceptual framework. If the management refuse to do this, okay, then he should consider the appropriate reporting to the ethical safeguards, okay. And finally, misconduct clause. If a chartered accountant knowingly permits, okay, if he knows that these are the material misstatement and if he permits these things, then he will be guilty under the clause 6 and 7 of the part 1 second schedule, right? That is failure to report the material misstatement and gross negligence in the duties as per the Chartered Accountant Act 1949. So this is this case study. Yes, in this illustration, what you are saying is, you are going to treat something as a discontinued operation. When can you treat something as a discontinued operation? Only if 5 conditions they will be giving, okay. So the 5 conditions, if it is satisfied, then only you can treat it as a discontinued operation. 5 conditions and one more condition will be there, okay. You just try to read that conditions and you can present that conditions also here if you have time in exams, okay. See here, so if the conditions are not satisfied, then you cannot treat it as a discontinued operation, which is not ethically correct, okay. So here the ethical principles, again, integrity, objectivity, professional competence, professional behavior, and the public interest responsibility. You do one thing, you just classify for which are the questions you are going to write all the 5 points, okay, and for which questions you are going to write only integrity and objectivity, okay. I'm not classifying here, please classify by yourself whenever you are studying, okay. And in this question we are going to talk about two things. One is Ind AS 105, that is non-current asset held for sale and discontinued operation, and the impairment of assets, right? Okay. Now, what is the ethical implication? Though the management may argue that the classification is legally permissible, okay, incorrect or premature classification of the asset as a held for sale is ethically questionable. Premature classification of asset, even before the condition is being satisfied, if you want to classify something as a held for sale or discontinued operation, is ethically questionable. So it may mislead the users of the financial statements, right? Because it may distort the profit figures, impair the comparability, and it will undermine the transparency. Okay, so what is the correct action that the auditor should take? So the chartered accountant should evaluate whether all the conditions of 105 are strictly satisfied. That is, high probability of sale, available for the immediate sale, management commitment, okay, there is no withdrawal of the plan. So all the conditions should be satisfied. Ensure the impairment loss and fair value less cost to sell or correctly recognized. So impairment should be properly recognized. Advise the management against the aggressive or misleading presentation. We should not do like that. You just advise your organization, okay. Advise the management. Insist on the true and fair presentation and adequate disclosures in the financial statements. If a chartered accountant knowingly permit the incorrect classification, misleading disclosures and manipulation of results, then it would lead to the professional misconduct under the code of ethics, attracting the disciplinary action. Okay, so this is about the misconduct. Here you are not going to quote any clauses as such, right? So you remember the two questions where we didn't write any clauses. Okay, we are just writing a simple conclusion and not clauses, right? Okay, test your knowledge. First question I'm not addressing in this video because it is the same kind of question which we have already addressed. Okay, so I think with this understanding you can easily approach your questions, and you can easily, after seeing this 9 illustration, you can easily approach in your exams how to answer the question. And even if you didn't study properly, okay, you can still score 3 to 4 marks easily by seeing this video. Okay, do well, keep studying, keep consistent, be hydrated. Okay, all the best guys. If you find this video is useful, please share it with your friends, okay, so that they will also use this for their preparation. All the best. We'll see you in the next video. Bye bye.